The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 18th, terrific Tuesday edition of today's Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our way, or said another way, if you live in your past, there is no future. Think about that one, folks. Hope everyone out there is having a terrific Tuesday. Let's make sure we do everything we can to have an extraordinary morning, afternoon, evening, depending on what time zone you're in out there. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, we're going to go take a look at the circumstances of the Bulls and the Bears, what they're communicating to you, and I'm absolutely grateful for your presence here, and I'm here to serve you. So feel free to pick up that phone, dial on in at 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. This is Terrific Tuesday. Of course, it is the Hotel California, sponsored by Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading down 37 points, trading at 17,509. The S&P off about 6 points at 2,096. NASDAQ Composite down 25 at 5066. Russell 2000 off 9 points at 1216. The DAX closed its session off 24 points, the same with the FTSE. Gold's back about $3 at 11.15. Silver's off 48 cents, trading at 14.81. Light sweet crude up 40 pennies, trading at 42.27. Kind of a quiet market out here. To the upside, Omeros Corp. Up 63%. What the heck? I don't know what's going on there. We'll take a look at that. Probably a buyout of some sort. Well, maybe it's an IPO. WellCare Health Plans, that's up 6%, $5. You got Intelliquent, that's up 25%. TJ Maxx, TJX, that's up 6%. Ulta Salon, up about $3. To the downside, Priceline, leading the charge dollar-wise, off $13. Aspedion Therapeutics down $7. Google's off $6. Chipotle down $6 as well out there. So where do we begin our day? Hey, at least it's not as quiet as it was maybe about 15 minutes ago. So let's go check in on, let's just pick up where we kind of left off yesterday. And where we left off, or what we did yesterday, was we first took a look at the bigger picture out here. So let's go look at the bigger picture. Bigger picture with regard to trend. New York Stock Exchange, Dow Jones, both price oscillators still above zero. That says that the buyers are still in control. Again, just to re-summarize out here, is re-summarize even a word? I don't think so. I'm probably going to get lots of cards and letters out here. But as we summarize what it is that you and I are taking a look at, since the trading day of July 29th, the New York Stock Exchange has been in the hands of the buyers. Yes, we've seen some movement from upside to downside. But the reality is, with the exception of maybe one trading session, 2, 3 potential trading sessions out here when the price oscillator got below zero, and then just simply was able to, buyers were able to come in and get that oscillator back above their zero line. Really, it's a kind of a line of, it's a line of demarcation to help you understand in the game of football, in this case here, buyers and sellers, who's the one that's got the ball. In this case here, it is the New York Stock Exchange. Think of it like a football game, right? The team on offense, is trying to move the ball forward, right? But if there's a fumble, there's a, somebody jumps on the ball, quarterback gets sacked, they lose some yards or what have you, they can lose, get penalized, right? They still have the ball. Think of the stock market and think of using the oscillator in really the same way, because somebody can say, wait a minute, price had moved down a bit. How could they still have the ball? Again, metaphor is really important. Visuals are really important. Symbols are extremely important out there. So for those of you that like football, it's a great way to do an analogy. You can still lose yards and still have the ball. That, in essence, is what took place during the movement that we saw inside of the New York Stock Exchange. Now, the Dow and the Composite It is not as simple when we take a look at those two. But right now, as we speak and take a look at the Dow, it is still the buyers, the bulls, in essence, that have control of the New York Stock, the Dow. Where is the Dow likely headed to? My price projection on the Dow before its next significant move to the downside, 1776, actually 17761 to 17826 out there. I will not be surprised to see the market just kind of gradually move its way up into those levels out there. We'll take things one step at a time. It's always good to have a trading plan and plan your trades out there. And that's really my trading plan right now, is to wait to see, unless there's some other information that reveals itself. But as we speak right now at 1:12 in the afternoon on August the 18th, that is the information that's being presented to both you and I. If we take a look at the NASDAQ composite, we did see that price oscillator move back above zero yesterday. It went ahead and joined its brethren, the Dow and the New York Stock Exchange. We can see right now a little bit of selling pressure back down below the zero line out here. Not much in the way of price damage. We've got an inside bar going on. It looks to me like the NASDAQ composite wants to make its run all the way back up in that 5183 level. In essence, somewhere right around there. We had a little bit of a gap down on the trading session between July 21st and July 22nd. So that too becomes a target. A little shooting star back here on August 5th. That becomes a target. So we have a fairly decent range as to where the NASDAQ composite ought to be able to bounce to. It's Tuesday. Between now and next Tuesday, I would not be surprised to see that unfold. So that covers the why. That covers where we're at generally speaking inside of the market. So yesterday we did the same thing. We took a look at these three charts out here to get a flavor for where we're at inside the markets. Then we went ahead and we went from daily charts out here. We went right down. We zoom right down into the 10-minute charts. And as we take a look at the 10-minute charts, now I have not touched this chart with one exception out here. Let me just get my little tool so that I can turn things on and off out here. Okay. As we take a look at this is the, by the way, let me pull this back just a bit. Here is the 10-minute chart for the ES Mini. And one of the patterns that you and I identified yesterday, let me actually turn off a couple of things out here, just make it a little bit easy. One of the things that you and I identified yesterday was this 19-point consolidation pattern. The ES Mini has got the most beautiful of consolidation patterns on its 10-minute chart out here. And we noticed that price had certainly broken above that level, giving us a price objective of 21.12. We didn't hit that. Last night, the price got up to a high of 21.03, I think, 21.04. What was it? 21.0375 out there. Before going ahead, giving it up and coming back and testing the top of the consolidation box. I did earlier in the morning put together this little trend line here and suggested to myself that if price, let me just kind of draw this all the way down to the end here, if we could see a break above this level, with some type of conviction, and we really didn't have any conviction when this level broke, that would signal, okay, we've seen a test of horizontal level of support, and then we had this little diagonal resistance line out here, and that would say, okay, enough testing of the consolidation. Well, that's really not what took place, right? So in this case, because price is now testing the top of that consolidation area, and look, we're not too worried whether it's exactly 2093. We're trading at 2092.75. At this stage, right around, you got to give it a little bit of room. I'd say down to about the 2091, 2090 area. We'll call it 2090 just to be conservative. As long as price doesn't get below that level, then we just have some more consolidating work to be done here. No idea how long it lasts. But if we do see a move to the downside with any kind of conviction and below 2090, well, we ought to just take a look at retracement levels out here. Let's just go from low to high. You can see you're at the 0.382 retracement, so no real damage off of the low from yesterday out here. The 0.618 retracement, a natural area. We take a look at, when you consider if you've ever run a race out there, this is like the stock market running a race. You put all your energy that you possibly can to get to the finish line. In this case here, the finish line happened to be that high last night at about, 10 o'clock, 10:50 out there when price got up into that high of 21.0375 out there. No, 8:50. I know I wasn't up at that late. I knew I was watching this happen out here. And In any event, so price gets up there, works as hard as it can, and then it's got to rest, right? I mean, you've put in all that energy. Well, resting basically is like your heartbeat going from max, okay, I don't know, 190 beats per per minute out there. I don't know how many, when your heart really gets racing, what does it get up to? I think probably a athlete in 175 to 185 type range, something like that. So we'll just call 175 out here. Maybe you're a super athlete and it gets above that. But say 175, and then it's got to back off 61.8% to get back down to kind of a normal resting heartbeat. That's all that's really going on inside the market out here. And in our case, for determining that retracement, getting back to that resting heartbeat, we really take a look at that 0.618 retracement. So if price gets down to 2,085, no big deal. But when you break a consolidation, as in this case here, the ES Mini did it on a 10-minute chart, and you fail, meaning price gets back inside there, it can mean that you're going to go back down and test the bottom, down around 2,074. So at this stage here, if you're an intraday trader, you really want to be paying attention to what's going on, believe it or not, inside this chart here for the 10-minute. But let's switch over and take a look at, let's go ahead and multiply times 10. Let's take our, no, times 30. 10-minute, we're going to a 300-minute out here. Let's go take a look at the 300-minute chart here for the ES Mini. And what we can see is this kind of interesting, right? So here's patterns that you and I had drawn in on our charts yesterday, maybe Friday of last week. I think it was Friday of last week, in essence. And let me turn off the profiles out here, and we'll just look at the trends. We can always turn those on at another point in time. But you and I drew this descending price channel, which on the 5-hour chart, price broke above with a nice wide-ranging bar. And that was very good. That was very promising that the market wanted to move higher. Again, price got up to a higher high. And all that it's done thus far, it's coming back and testing its level of support, right? That little descending price channel. So we know on a 10-minute basis, we got a little bit of horizontal support that's being tested. On a descending basis, we can see that there's a level here that's being tested. And what that says to both you and I is that price now needs to clear that swing point from about 850 to 9 o'clock last night. If we take a look at the other levels of support and resistance, at the same point in time that it was hitting that level, it was also the the top of the weekly high as we take a look at our TAS market profiles, 2104. So 2104 is a really important level for the ES Mini to be able to move above. If it does not move above that, then that says, and we see a breakdown, certainly getting back inside that 10-minute chart out there, it says you're likely going to go test the lows out here. You're at least going to get down to 2085. I don't recall, where was the 10-minute? Let me see, what was the 10-minute level? 2085, son of a gun. How does that work? How does that work? 2085 was the 0.618 retracement from low to high inside our 10-minute chart. 2085 happens to be the daily market profile bottom out there. Boy, that should be really good support if, in fact, the ES Mini can break the lower price out there. Folks, it is Terrific Tuesday, affectionately referred to as Turnaround Tuesday. I don't know if today's going to be a turnaround or not. I'm thinking not. But I am so glad that you're here. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's down 36. S&P is off 6-point. NASDAQ Composite down 26. Let's go up to the beautiful city of Tallahassee, Florida, to our man, Ben. Ben, thanks for calling. Thanks for holding. How are you doing this afternoon?
Excellent, Steve. How are you?
Excellent. Thank you so much for asking. You're taking a look at USO, which is the Oil Holders ETF Trust. Tell me what you're doing and how I can assist you.
Well, I can tell you I'm looking at a chart, short-term, long-term, and I'm seeing that I need to seek advice because I get I'm getting some feedback from others, and I don't know if maybe it was Basil or yourself that thought there might be a good opportunity to take a little nibble here, and I keep staring at these charts, short-term, long-term, and I'm just wondering if you're seeing something, and if you are seeing something to maybe take a position around this area, what it is.
Well, yes. On Friday when I did Tom's show, I shared with folks that I thought that there was a tradable bottom that was forming. It wasn't confirmed, but there was a tradable bottom that was forming. And it was really based upon two patterns out here. Those two patterns, one being a seventh wave move to the downside in our Chapman wave counts. Now, that was using, so I'm looking at the action, I'm looking at the continuous contract versus the USO, but we probably would find...
I'm sorry, what time frame was that, Steve?
It's a daily chart that I'm looking at.
Got it.
And I'm beginning my count to the downside on the trading day of June 10th. And from that on that continuous contract, I believe we're in F on the actual current contract, so we're getting pretty close. But on the just using the continuous contract for our purposes right now, 2 days ago we did get a seventh wave. Well, yesterday we confirmed that seventh wave move. Now the price point that's really critical in order for that pattern to be valid is 41.35, and so far today the low has been 41.43. So it hasn't been taken out. If it does get taken out, then this pattern just kind of moves off to the side. Not that it can't be valid, but it's not going to be valid for that wave count series. So that's one potential pattern that is out there. Another pattern that is in play is the fact that price has been moving lower as it made that seventh wave move to the downside with less relative weakness. And when price moves lower without the energy, without the real strength really behind, I consider strength to be the upside, weakness to the downside. So when it's moving lower with less weakness, with less veracity, that is another potential pattern. Now, as I take this same chart back, and we take a look at the last time that there was a nice buyable bottom, was making a similar type pattern with regard to price moving lower with less relative weakness. That was back on January 29th, 2015. You had price go from 44 bucks up to 54 bucks out there. So that was a tradable bottom. Obviously, we have seen prices move even higher than that, but I'm just looking at similar type patterns out here. If you add 10 bucks to the $40 area, it gets you to 52, $51 happens to be, looks like the TAS daily market profile high. That's probably a pretty good target if in fact there were to be a bounce. We don't have any other signal that I can see just yet. Now there is one other pattern. If I just take a look at the average directional movement indicator out here, this is a really good tool to use that helps you to identify when a trend is coming to an end. And at this stage, the reading on that is 53.42, Ben. And as soon as we see a tick to the downside, similar to right back here. Now, just as an example, on May 6th, the reading on that same indicator was a little bit lower. As long as you're above 40, that's what you're looking for, was 48.99. And on the very next day, it dipped down to 48.37. That was your signal that the high of that previous day was likely resistance. And that happened to be the very next day on May 7th, that actually set up an evening star reversal pattern, and that high was never taken out. So it stands to say we haven't seen a tick to the downside. That would take place potentially tomorrow. If we did see a tick at tomorrow's close to the downside, then we'd be looking at the opposite of the pattern that was able to identify a high up top, combined with a couple other things down there. Does that help you at all as far as what at least I'm looking at?
Analogies. Yeah.
Hey, I'll tell you what, Ben, I didn't hear you because somehow the sound cut out. But if you want to hold on through the break, sure, hit me up with some other questions that you have, because what I said might have been confusing, or or not. But hold on through this break. We'll go back to you and we'll try to pick apart the USO / what light sweet crude might be doing.
No problem.
All right, Steve Rhodes with TFNN.
Thanks.
Ben and Steve Rhodes will be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back to the show, folks. Dow's down 38. S&P is off 6 points. We're on the line with Ben in Tallahassee. And Ben has called about the USO, the ETF, to play, one of the ETFs that you could use to play the oil trade. Now, Ben, what I was doing, during that segment, we were taking a look at the continuous contract for oil. I did, during the break here, pull up the contract for the USO, since that's what you're using to make your trade off of. And if you use as your starting point for your wave count, in this case here it would be June 3rd. I don't recall the date that I used for the continuous contract, but nonetheless, if you were to use that date of June 3rd, what that would show you is right now, today, you are inside that seventh wave pattern out there, that G wave. And as we speak right now, it looks like you've got a little bullish reversal signal, that little bull sash. We don't have a price relative strength divergent pattern out here, and from a trading standpoint, let's say you were to take this trade. Now, in order to get the confirmed seventh wave, you would actually need to see a higher low tomorrow. A lower low just means that pattern continues on. And at this stage here, I don't see the signal to go ahead and execute the trade. Now, really, the trade should be patterned off of what goes on inside the current contract out here. But if you don't have access to it, then you got to go with what you've got. And so, is this making sense to you as far as what we'd be looking at?
Yeah, I guess I've been muting my phone here because I guess I'm in a pretty bad area. So I guess the two questions I had in addition to what you said is, are you seeing anything from a seasonality standpoint when you bring up like the history of oil trading? And then the second one is, do you see anything from a channel standpoint?
It's a great question. And from a seasonality standpoint, no, I have not done any kind of study on light sweet crude to determine whether there's some seasonal aspect of that could influence us. I think with light sweet crude having moved down as far as it has, I don't know that the seasonality aspect of it, whether it's anything that would really be, that reliable. If we went back on the longer term chart out here, and that's why I would say that this could really be just a trade, not an all-out bottom. But we're getting near to that potential bottom. And what I mean by that is if I just put up a quarterly chart out here, that's what I've got, the continuous contract, I believe we're at or nearing the 0.78. Yeah, we're nearing the 0.786. No, we're through the 0.786 retracement. What the heck am I talking about? So that says, what that really says is more likely than not, the figure that's being bantered around of 33.20, is still a likely target over the long haul out here. But the reality is, what's the time frame horizon that you're looking at in making your trading decision?
Yeah, I typically I'm like a monthly type trend trader, so.
Yeah. If you're a monthly type trend trader, then stay out of the fray, I would say, and wait to see what happens when price gets down to that 33.20 level. Because from a monthly standpoint, you're trading inside that swing point from back in 2009. And you want to either see that level get cleared at 50.47 to get out of Dodge, or the longer term, it says more likely than not the lows are going to be tested 33.20 out there. But it sure does seem like the question really becomes, as trash as this has been, it's a commodity that is not going away, right?
Right.
And so $33 is a relatively inexpensive price out there. So it does seem like I'm trying to find that nice longer term monthly, even if it goes sideways for a while. Seems like a good play, and that holds true.
Well, you'd think from a fundamental standpoint that OPEC and the crew over in the Middle East are at some point going to say, you know what, that's we're going to say the bottom's in and do what they need to do to crank it back up.
Yeah, I don't really understand the geopolitical aspect of what they would do. I really had believed when the top came in last June or so, and I was saying it on the radio show that I believe that there was a reason to go ahead and squeeze Putin. That was the biggest play that the world had on Putin, was to drive the price of oil to the downside. I never anticipated that we'd get down to these levels. But it's obviously it's a pretty decent monopoly, so to speak. I would think, and I don't think that prices are going to stay down in the 30s for forever. That's for sure. It'd be nice.
Well, good. I appreciate the technical analysis, Steve, as always, and keep up the great work.
All righty, thanks so much for calling. That was Ben in Tallahassee, and I think we thoroughly ripped apart USO light sweet crude out there, and time will tell whether or not any kind of tradable bottom is in. Of course, the energy sector out here continues to take it into the shorts. If we take a look at the XLE, just to see what it is doing here, nice little bullish engulfing candle last week. Does that have any meaning necessarily? Maybe, maybe not. Let's take a look at the daily chart, actually, see what we've got going on out here. So, and we know that the weighting structure inside the energy sector, right? You got Chevron, Exxon Mobil. The energy sector doing what it can to try to identify a bit of a bottom out here, but it's trading back below right now today, back below an area of resistance that was its TAS market profile high on the daily time frame, which was 69.41. You're at 69.04. But it should have some really good support if it were to pull back to 67.40, 66.81. If it's pulling back on light volume. Again, this is a daily chart. We can see nice light volume out here on the pullback as we speak. So that's pretty good. If, in fact, the XLE is able to take out the high of August the 12th out here, that being 70.74, then you can, and it can if it can do it with volume to have an A to B equals C to the upside. This is yeah, so that's that's really the pattern that's out there. What I've got to do, Bennett asked a question about the seasonality aspect of it. So I'm anticipating the market's going to put in its final summertime top here soon, next week-ish. Just really want to take a look at what pattern takes place out there. Then I believe that the market moves lower like it normally does through October. At least that's the initial time frame. I will change that opinion, by the way, if somehow over the course of the next 5 trading sessions, the New York Stock Exchange gets that price oscillator up above the 150 level, because that has a totally different meaning out here. But we're not there yet. I don't know that we're going to get there, but that would absolutely change my opinion on what the market is communicating to you and I. But if that's the case, and the market's going to move lower for quite a period of time. Right? We're talking about the end of August through, at least 6 weeks, something like that. And there's plenty of signals out there that suggest that that is what will come to fruition. Then the question of, geez, are you really going to take a trade going long light sweet crude, which would be the opposite? Typically, although we haven't really seen that here as of late, the market moves in the same direction as light sweet crude out there. In any event, don't cloud your judgment too much. Just simply take a look at the patterns that work for you. Go ahead and trade those. Use some stops, and you'll be just fine out there. Trades work and trades don't work. Let's take a look at, so on the energy sector out here, I'm not seeing anything of, have we seen a real sign of strength off of the bottom? Not really. Not really. I think we're better off just taking a look at ExxonMobil and Chevron to really get a feel for what's out here. In the case of ExxonMobil, it's pulling back. It's at 77.74 out here. Have we seen a sign of strength? Absolutely, positively not. What I'm thinking, my thoughts here on ExxonMobil is that, it's got the what kicked out of it, right? The highs back here in April were up in the 105 area, 104. Here at $77. Yeah, that's getting the snot kicked out of you. But I would love to see, I don't know if it will play out, but it's certainly keeping an eye on it, would be that, let's say that the initial plan that Stevie believes the market is following is going to be in play. Market moves down 5, 6, 7 weeks, something like that. I also have another plan where it moves down for the rest of the year. But we're going to take things one step at a time. And the market doesn't follow my plan. It just means things that I'm looking at. But what I'd love to see is the market move down for like 6 weeks, get to a scary type of Ebola-type bottom out there. I don't know where it's going to come from, but it comes from somewhere. And then you've got ExxonMobil testing the bottom of this rising price channel out here, which is a quarterly chart that you and I are looking at. Then the price point area is somewhere around $71 or so. We don't need to get exact on it, but boy, wouldn't it be nice to have that set up and then go ahead and have our traditional Santa Claus rally, which begins in October. Sometimes it does happen on, I think, the Black Friday out there. It's Turkey Thursday, Black Friday, right? And then continues to move up. But really, all those bottoms typically form in October, not in November out there. And that would set up a nice move inside ExxonMobil, which would also be a nice move or potential nice move inside the XLE. Although, because of the loss in market value of inside ExxonMobil, it's I think it's only like 14, 15, 16% of the energy sector, if I'm not mistaken. We can find out, I think, here. We could, if I could put my finger on it, and I'm sure it's right in front of me, and I'm just not going to put my finger on it. But that's inside of ExxonMobil. Chevron CVX, which is worth looking at. It's not as healthy of a stock chart as, not only is it not as healthy, I'm not getting any data. That's really bad health out there. I'm not sure why it's resolving the symbol. it's CVX. But in any event, well, that's very odd. Not getting that data feed. Don't know why. But so we will just simply skip over the. We'll just simply have to skip over that. Let me see if I can get anything else to come up here. There we go. Well, I got the Qs. Let me try that one more time. CVX. That was Qs came up on a quarterly basis. Very interesting. Somebody is trying to keep from you and I. There we go. Now we got it. Chevron. So as we take a look at it, remember the chart that you and I just looked at with regard to ExxonMobil, you can see that Chevron's already busted through. It's a rising price channel out there. Does that mean that ExxonMobil is going to? No, it doesn't mean that. But it just means that a healthier looking stock chart, one would consider right now ExxonMobil. Now, what Chevron is doing is Chevron's trading back into its swing point low, which is from the 55.50, which is from October of 2008. So it is testing that level, and that's a big volume bar. Down there, 1.3 billion shares, and the high is 83.70, and you're at 83.16. So you're trading inside that. Again, a quarterly chart out here. Maybe if we switch to a monthly, we can go get a gauge as to whether or not we're down to the monthly swing point. I don't know if we are or we are not. Back in 2008, the monthly swing. Is that the? Yeah, we're below that for. Oh, okay. So it is also 83.70. That has volume of about 500 million, 559 million shares. And man, you're into it. You are into it light. Nonetheless, 83.12 is below 83.70, and that says. Just like Ben and I looked at light sweet crude, says you can go down, even if when you get into a swing point with light volume, says you can go test the low until you reject the top of it, which is 83.70. So there's no real trade set up here, so to speak. Now, if we take a look at its relative strength indicator, the last time its reading, by the way, is 31.49 on a monthly chart. Last time we saw a low, that low was back in May of 2003. And in May of 2003, well, it was actually, wasn't May, it was April of 2003. That reading got down to 32.30. And that set up a heck of a nice bottom, did it not? Because light sweet crude went, not light sweet crude, Chevron went from $32, $33, and ran all the way up into the highs in 2008, up to 104. Will it do the same? I don't know. But just saying that we're getting to these stages out here where it really is worth paying attention to, something that everybody else is really just trashing out there. Similar to gold. Now, in the case of gold, you know, we've had some decent movement, down $2 today with the U.S. dollar index being up a little bit out there. But that's not such a big deal. Now, I talked about the U.S. dollar, right? You got gold priced in dollars. But, of course, you and I also go ahead and price gold out in euros. And this chart here is the price of gold in euros. That's the bottom panel of my screen. And we have noted that the level of breakout area took place back from the date of March 17th, 2014, when gold priced in euros closed out at 986.80. And we can see we're trading now at 1011. So gold priced in euros, to me, this is also a bit promising, has also, in essence, broken back above a level of support out here. Came back, tested it, just turned around, but it's got to keep moving south in order to have really, north, in order for it to have really any meaning out there. This is Steve Rhodes with TFNN on a quiet day in the markets with the Dow up 38, S&P down 7. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Folks, let's continue taking a look at light sweet crude out here. And maybe I'm making too much of it, but as trades go right now during this quiet time, it's a place that we ought to be looking. Now, right now it's priced out at $42.44. We're looking at the September contract, and what we are down taking a look at is a 10-minute chart out here. And we've seen a nice move off of the bottom here earlier this morning. At about 4:20 this morning, we saw price get down to that 41.43 level. Seeing some gradual movement to the upside. And right now is the time where it's going to start getting into, potentially get into a bumpy ride. The question's going to be, can price get above 42.64, so another 20 cents to the upside, and then 42.78 out there. So you're looking at what, another 64, between the next 35 cents or so out here in the marketplace. Doesn't sound like a lot for something selling at $42 in light sweet crude, but what we have out there is some fairly decent volume up at those levels. Now, the key area that gold really needs to clear out here is going to be the level of about 42.96, so another $1.50 to the upside. And if it does that, that tradable bottom is in. So at this stage, the thing to be watching is what happens around 42.64. Do the sellers come back in? And we've seen quite a bit of selling at that level. Highest volume bars, 42.78. Quite a bit of selling at that level. And then finally 42.96. So those are its hurdles that it has to get above out there. You'd like to see it come into those areas with volume. At 1:56 in the afternoon, that ain't happening, and I don't anticipate or expect that we're going to see it happen. But it is worth continuing to watch. Currency-wise out here, did mention that the U.S. dollar was up 25 cents, trading out at 97.07. Of course, that's courtesy primarily of yours truly, the euro versus the U.S. dollar. If we take a look at it, that's a 10-minute chart, but we want to go take a look at the daily chart out here. So let's just flip back and ignore those volume bars down there. They really don't have any meaning. Yesterday, we were talking about the potential for a continuation pattern, a rising 3 pattern inside of the euro. In order for that to take place, the euro is going to have to close above, as far as my analysis of the candlesticks. It needs to close back above 1.1041 in order for that to occur. Otherwise, what we have going on is just simply a retracement. A retracement to where would be the question that I would ask, and I will just say you just take a look at probably a 0.618 retracement around 1.0987. And if we see that and price moves higher, then we'll have our third lower low, our second higher high, and that says that we could see the euro try to get back inside that old rising price channel out there. But it's got a long way to go before it, in fact, does that. As far as other currency pairs, it looks like the Great British Pound has got a little bit of movement in it right now. What is it doing? We take a look at its daily chart. It's been trading sideways. Somebody's got their thumb on the Great British Pound. If I put this thing on a closing basis, we're not going to see a whole lot of movement out here. Therefore, I don't see a whole lot of movement to really discuss, and that is on the Great British Pound. Silver, we did mention silver was back a bit. Silver's down 49 cents as we speak right now. Let's take a look at it, get a feel for what it's doing. So silver, certainly weaker than gold and getting all the way back into its most recent swing point from July 24th. Well, folks, stay tuned. Our man David White is going to be up next. Of course, it is Terrific Tuesday. That means we've got the full lineup. After David, you've got Tom O'Brien from 3 to 5 and Andy Heck to take it on home from 5 to 6. Have a great Tuesday. Hey, I won't be able to be with you tomorrow, so have a wonderful Wednesday, and I'll see you back on Thursday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.